China's latest economic data is spurring concerns around deflation risks and raising questions about the need for economic stimulus. Now, the country's consumer price index stayed unchanged from a year ago and saw its factory gate prices slip at the fastest pace since 2016, marking a demand slowdown. Peter Tchir, who is the Academy Securities head of macro strategy, back here with us alongside Yahoo Finance's Rick Newman. Great to have you both here with us. Peter, as we kind of kick off this discussion, and the data that we've seen come out of China, what's been most surprising to you at this point, and where are you perhaps expecting some shifts?
I'm not really that surprised. I think there was a lot of hype about the reopening. China wasn't going from 0 to 100. They were already largely open. And I think what we're really seeing right now is just more and more confrontation, whether it's on the chip side. I think last week they refused to export to key rare earths or critical minerals. We've announced that we're going to use the National Defense Production Act to supply ourselves with those, or maybe even start producing them. So I just see friction at a very high level. And the one trend that I'm seeing, though, is I think they are going to use the yuan more and more. They're going to get more countries trading with them. And you're going to start seeing a push for Chinese manufacturers to sell their products globally, rather than China just making our products to sell globally. I think that's the biggest shift, is what we're calling this going from made in China to made by China. You're seeing it. BYD is setting up a factory, which is their EV maker in Brazil. So they are going to go after, I think, our customer base globally. And that's going to be a risk. It doesn't play out tomorrow, next week. But I think 2 to 3 years from now, we'll all look back in hindsight and say, wow, we should have fought this better.
Peter, I want more from you on that. But first, I want to go to Rick, because, Rick, I'm curious your impressions here of, giving Janet Yellen perhaps a grade as to what was accomplished here, which doesn't seem to necessarily have moved things forward, but it didn't seem to move things back either.
Right. I think Washington and Beijing are in what's going to be a long process of sort of repairing relations. We've been going backwards in a lot of different ways. There was the Chinese spy balloon. Remember, Secretary of State Antony Blinken, he canceled a trip that was supposed to happen right around then. Go back to last fall when Biden imposed these very strict advanced semiconductor limits on exports to China and keeping American technology out of China. So, the sort of messaging from the Biden administration before this was low expectations. We're not trying to achieve a massive reset here. We're just trying to basically restart dialogue and find areas where we can cooperate with China, because there are a lot of areas where we are in conflict or in confrontation with China. So finding areas of cooperation. John Kerry, the climate envoy, is probably going to go to China next. That might be something where the United States and China can cooperate. So they're just going to try to figure out where they can find a little bit of common ground.
If climate, then it sounds like a lot of the EV companies we talk about, Rick, should have something perhaps to look forward to or hang their hat on there, especially given the multitude of them that have tried to plant some type of factory production or just annexation into China through their sales or vehicles that have done well here in the U.S.
There is a lot going on here, and I saw a report recently from Morgan Stanley saying we're actually going to start seeing a fair amount of Chinese-made electric vehicles in the United States at some point. And the reason that's important is that they are going to be way cheaper than anything made here in the United States. So we know that the Inflation Reduction Act from last year, tons of incentives for investments in electric vehicles and everything associated with electric vehicles, especially the batteries. But China leads on electric vehicle batteries, and importantly, they have a lot of the components for those batteries homegrown in China, whereas we do not here in the United States. So China already has a considerable lead on electric vehicles and a lot of technologies that go with it. And we are going to start seeing some of that stuff, or more of it, I guess I should say, showing up here in the United States.
And Peter, this goes directly to the point that you were making about China, instead of just manufacturing things for American companies, is going to start exporting more of its own brands to the West. Do you think that EVs are among that? Are you counting those among that? I mean, is it too early as an investor to start looking at those opportunities? And then finally, sorry, a lot of questions in one, do you think it's going to work? Do you think there's a market for this stuff?
Yeah, so I start with basic premise that right now China has jumped the gun on us and they're way ahead of us in terms of securing these rare earths and critical minerals. So they have that. That means they tend to have these trade deficits to a lot of autocratic, resource-rich nations. They're generally poor. Let's say a lot of the emerging markets countries. So I think that's where they're going to be able to have a lot of success selling their EV vehicles, for example. Even the Chinese aircraft manufacturer finally had their maiden flight. It was a domestic flight, but they will start looking to sell those aircraft globally. And they're not going to come to the US first. We're going to want to drive Teslas, Rivians, Fords, GMs, you name it. But I think in some of the emerging markets countries, the pitch of, well, here's your BYD or some other Chinese brand. Yeah, it's not as nice, it's not as good, but it's only cost 40%. That is going to do very well. And that's why it's so important that China's developing more and more trade in yuan. So I think it will work, but they're going to make inroads starting with the emerging markets and working their way up. And that's something we're going to have to aggressively compete with.
Hey, guys, just a reminder, Warren Buffett invested in the Chinese EV company BYD years ago. So this is not a new idea.
Yes.
Yeah, and I guess the one thing that made me smile when you asked. Yeah, and the one question I think I had when you asked, made me smile was like, do you invest in these Chinese companies? And I think that's very difficult because I think China does not care about U.S. investors. So I think it could be a detriment to U.S. companies. I think it's going to be very difficult to succeed as a Western investor in these Chinese companies, whether they create new share classes. I mean, I'm very dubious about that. So I can see this direction those companies are headed in, but I won't touch them because I'm very concerned about the ability to actually monetize that view.